In this video, I will share with you my price target for Tesla stock in 2025. Now, we're going to look at catalysts that are priced in, that are not priced in, some upside surprises that I think will come in 2025. I will give you my bear case, my base case, my bull case for Tesla stock next year, and whether or not I am buying Tesla stock at current prices. And last but not least, we will talk about the risk with Tesla stock in 2025, and there's one big risk that you need to be mindful of. So first and foremost, let's look at what is priced in, what's not priced in, your catalyst for Tesla stock coming next year. Now, some of these are applicable from now until the end of this year. Like, you're probably not going to see much tax loss harvesting because Tesla is at these higher levels. If you have not tax loss harvested, in recent years, you really don't have an opportunity to tax loss harvest at this point because Tesla is at the highest level it's been at in many years. Okay, so that may not be a negative factor for Tesla into year end. Now, also into year end, everyone's clearly anticipating next year, and with favorable Trump/Tesla policies, that is likely to be a tailwind for Tesla into the early part of 2025. Now, Tesla had the strongest guidance of any large cap tech company. Elon guided for 20 to 30% delivery growth next year, which is stronger than expected growth for any of your other Mag 7, which really puts Tesla in its own category. Now, Tesla, in my opinion, is the biggest AI opportunity in 2025. We'll talk about that a little bit more in just a moment. And we have the potential for a Santa Claus rally. Now, a Santa Claus rally is really just a seasonal trend that tends to mean November and December is good for stocks. There tends to be optimism heading into a new year, with the biggest, period in time of spending being the, month of December. You tend to get a lot of optimism around this. Again, makes a lot of sense. Santa Claus rallies can happen. Sometimes they don't happen. It's not something you should count on, but it's a pleasant surprise if it does happen. Now, these are the catalysts and surprises that I think we will see for Tesla and really generalized markets next year. First and foremost, you have 10-year treasuries that are likely to fall to 3 to 3.5% in 2025, supporting risk on activity. Now, why I believe this is because I think inflation is going to come down more than expected. If you really look at the breakdown of inflation, the largest chunk of it by far is still shelter inflation. We've recently heard from Redfin's CEO that says 2025 is really going to be disinflationary for shelter inflation. And if that starts to finally come down, which, it's been a couple of years now, then that's going to do the most in driving inflationary pressures lower. Now, where I really see the positive surprise here is Wall Street is expecting higher inflation or more stubborn inflation because of some of the Trump tariffs. And let me just tell you, that's not going to be inflationary to the extent that Wall Street thinks it will be. Wall Street is really overemphasizing the impact that tariffs will have on inflation versus the surprise that maybe tariffs are not that bad. Maybe they're going to be smaller than we think. And I think overall there is a much greater chance of the positive surprise there versus over tariffing, higher inflation. I think there's a much greater chance inflation comes down and, comes down more than expected, and tariffs are not as bad as expected. Okay, so I think that is supportive to driving down 10-year treasury yields, which is supportive for Tesla stock, as Tesla is a very interest rate sensitive company. Now, next up, we have the lower priced Tesla that will likely spur higher deliveries. Now, this lower priced Tesla, we still don't know a definitive start date for production of this, but we are expecting this is going to be in the first half of 2025. So it should start to actually add to deliveries in this next year. Okay, so this is not a multi-year thing. This should actually impact deliveries for next year. Now, a US recovery. China has led strength. What I mean here is the US used to be Tesla's largest market. Okay, by far. China has overtaken that title. In the last 4 to 5 quarters, Tesla deliveries have been higher in China than the US. And that's really because the US consumer is just not in a great place. Like, the data that we're seeing is not exactly accurate of how people are doing. Call it government manipulation of the data, call it what you want. Maybe it's just bad collection of the data. Maybe it's a combination of both. Who knows? But if the consumer does regain some confidence, if you do see incomes start to rise more than inflation, and people start to get quote unquote ahead, you could see more people opt for that new car purchase. Now, we did have some good news on this front. Personal incomes came in at 0.6% month over month. We were only expecting 0.3% month over month. So if that is a trend that continues, you could see the US start to pick up in sales and deliveries for Tesla. And as long as China holds the current strength and levels that they are now, that's going to mean an upside surprise for next year's deliveries. Now, there was a new report out today that Juniper, the refreshed Model Y, could be coming in January, and the refreshed Model 3 did a lot to boost sales, and the Model 3 is Tesla's second most popular model. If the Juniper comes out for the Model Y, as we expect in January, then that will likely have a further boost to sales for Tesla in 2025. Now, we also have a new Megapack factory that should be coming online in January of 2025, so about 2 months from now. And Tesla has said before, that basically anything they produce as far as Megapacks is like instantly sold. There's almost infinite demand, and there's really just a supply constraint on Tesla's part to meet that demand. So more Megapacks coming online, effectively doubling Tesla's Megapack output, is just going to be a positive for Tesla that I don't think exactly is baked in to Tesla stock today. Now, I also have here a Tesla upgrade cycle, meaning Teslas that were bought from 2017 through 2022. Some people, just like iPhones, might want to now upgrade their Tesla. If you bought between 2017 and 2022, you're probably starting to get the urge to upgrade your Tesla. And I think much the same way as Apple has refresh cycles, I think periodically Tesla is going to have refresh cycles. And 2025 could start to be that refresh cycle for Tesla. Now, I have here Optimus contracts by the end of next year. You could start to see, as Elon has said before on company earnings calls, a limited rollout of Optimus bots in select industries by the end of next year. This is likely to be like warehouse activities, manufacturing activities, something along those lines. And I think some kind of Optimus contract could be in the works before the end of next year. Think about this like Pepsi and the Tesla Semi, right? Pepsi and the Tesla Semi have had a contract for a while where Pepsi was really the first company to be interested in the Tesla Semi truck, to be testing the Tesla Semi truck to see if they, want it. And that is something along the lines you could see with Optimus, which is without a doubt not priced into Tesla. Now, I have here an FSD rollout in China and Europe in the first half of 2025. This is something that the Tesla AI team has already put forth and kind of said in writing that they expect. And I don't think this is priced into Tesla stock either, because it's such a high margin business. And it's really hard to say how many FSD subscriptions would come online if that was now available in China and Europe. Would 20% of Teslas opt for FSD? Would 5%? Would 1%? Would 10%? I don't really know the right answer for that. Maybe it's between 10 and 15%. That could be hundreds of millions of dollars of pure profit next year. And I don't think that is priced into Tesla, because I don't think average investors are expecting an FSD rollout in China and Europe as fast as Tesla is. So I think that is a positive surprise coming for Tesla, probably in the first half of 2025. Now, this next catalyst, I've talked about this in prior videos, but I think it's important to kind of reiterate. Tesla's last earnings in late October, Tesla gave guidance under the assumption that if Kamala or Trump wins, this is the most likely base case scenario, okay? And that was 2 states to receive robotaxi, essentially permits for next year. That is California and Texas. Now that Trump has won, and we just got news, today and yesterday, that the Trump administration is going to make it a little bit easier for robotaxis to gain that permit to start operations. I think you could see, instead of 2 states, I think you could see as many as 8 states actually approve robotaxis in some kind of capacity. Now, let's be honest, until the public gets used to robotaxis and accustomed to the safety that they bring, I think you're going to have remote monitoring of robotaxi rides. I think this is going to be like Waymo, where you have people that sit in offices that watch and monitor the robotaxi experiences. So if they need to, they can intervene. Now, a lot of people are in the retail community get lost in the sauce when it comes to this. It does not matter if you have people that are monitoring these rides or not. In terms of Tesla stock, all it matters is, are you actually doing robotaxi rides, right? It doesn't really matter if people are monitoring these rides, ready to intervene when they need to. It just doesn't matter, right? So no matter which way you have robotaxis launching, whether nobody's watching them or you have teams of Tesla employees watching these rides, it does not matter, okay? So I think there is a strong likelihood of an upside surprise there, anywhere from 2 to 8 states that could permit robo-taxis for operation. This will likely be New York, Florida, possibly. Texas, you could be looking at something like Georgia here. You could be looking at Arizona. Phoenix already has some robotaxi operations. You could be looking at California, Nevada. That's 7 states. And there could be room for another state or 2 in there. So I think that's an upside surprise coming. Now you also have Tesla semi-production in the second half of 2025 that I also don't think is really baked into Tesla at all. Now, I don't know that we're going to have good numbers here. The semi-factory is currently being built in Nevada as we speak. Is it going to make a huge fundamental impact to Tesla? Probably not, but I still think that's coming at some point in 2025. Now, I just want to hit on a generalized point that I've made in multiple videos now about the year of AI appliers. Last year, in 2023, were really the years of semiconductors, the AI enablers. 2025 is going to be about the AI appliers. It's going to be about software. It's going to be about full self-driving and robo-taxis and other applications that come online via AI. Now, there is no other clear winner or clear way to invest in the 2025 wave of AI appliers than Tesla. Tesla is by far the best way to invest in this, and I think will drive overall a lot of hype and optimism throughout the year. Kind of like Nvidia could do no wrong last year. I think it's going to be one of those scenarios where Tesla can do no wrong. Okay. And I think that overall is going to help boost Tesla stock a lot. Now, we're going to get into the fundamentals in just a moment, but Tesla, once again, could be the biggest high-flying stock on our markets. Maybe it doesn't seem like that now, but just wait. Just wait until robotaxis actually start to launch. The opportunity is so large there. There's almost no way that you can put a limit on that, okay? Because, I mean, just from the US perspective, let alone what Canada robotaxis could mean, or China, or Europe eventually. Like, the total addressable market is so large. How do you value it? I mean, you can come up with some very large numbers, but trying to limit that potential is a very hard case to sell. And I think that's going to be part of why Tesla is going to be an exceptional stock next year. Okay, now let's get into some of the more fundamental, aspects of what could drive Tesla's performance next year. And you might be surprised to see this, but we're actually going to talk about 2026. Yes, because by the time we get into next year, by the time we get into Q1, Q2 of next year, Wall Street's already looking ahead at 2026, because when you're buying a stock, you're really buying a stock for the future, right? You're not buying a stock because they're doing great today. You're buying a stock because you expect them to do better in the future. So as you get into 2025, Wall Street's going to be looking at the next 12 months, and that's going to put us in 2026. So for a price target by the end of 2025, you really need to be thinking about what the end of 2026 could look like. So for this case, if we're trying to think what Tesla could do by the end of 2025, we have to look at projected numbers for 2026. So in some of my quick calculations here, I project around 2.9 million deliveries for 2026. Now, this is higher than Wall Street generally expects. Wall Street expects around 2.7 million deliveries in 2026. I think Tesla is going to excel Wall Street's expectations, so I'm a little bit higher there, with an average selling price of $40,000. This is going to be a blend between the Model Y, the new lower price Tesla, perhaps the Cybercab, the Cybertruck, the Tesla Semi. I think blended together, which could put you at about an average selling price of $40,000. Now, today, Tesla's average selling price is around $44,000. So I'm being a little conservative here, because this number, could be a little low. Perhaps it's 42,000 or 43,000 mixed all the Tesla pricing models together. 2.9 million deliveries with an average selling price of $40,000 equals 116 billion in revenue. Now, I have 40 billion in revenue from services, energy, and robotaxi operations. By the end of 2026, I think that is far too conservative, but I want to be conservative here. So that's my projection. With a 20% net margin, that equals 31.2 billion in potential bottom line profits, divided by 3.3 billion shares outstanding, gives you an EPS of $9.45 in 2026. And I think you could slap 100 times multiple on this, because if we avoid a recession, if we have favorable policies for Tesla and robotaxis, as robotaxis starts to launch, Wall Street's going to project a lot of growth in that area. And the multiple really comes down to growth. Stocks with a high multiple are pricing in more growth. That's specifically why I don't like other big tech stocks right now. Even Nvidia, Apple, like why is Apple trading at over 27 times next year's earnings when they've grown revenue 5% in 3 years? It's not a lot of growth there, so the multiple makes 0 sense. For Tesla, that could start to grow at 50% clips as far as bottom line profits because of robotaxi in due time, 100 times multiple could actually be pretty cheap. Now, 100 times multiple on $9.45 of EPS would put the stock at $945. Now, I think that's a reasonable base case assumption, between 850 and 945. So we'll jot that down. Now, a base case scenario is what's expected. Now, this would be by the end of 2026, as Wall Street starts to finalize targets for 2026. Okay, so that's a base case scenario. Now, the bear case scenario is very, very difficult, because the realistic bear case scenario is like $200 per share by the end of next year. But that would include some kind of recessionary environment. That would include a pretty large recession, in my personal opinion. Now, what's the likelihood of that? 2%, 3%, 5%? I don't know. It's a very low likelihood. So I think to really put a bear case, assumption on a stock is a very difficult thing to do. The bear case could be anywhere from $200 to $250 per share. That's like the lowest that I would see Tesla next year, and that you would need a recession, and again, that would be by the end of next year. So bear case, 200, 250. A more bull case scenario, you could assume $40 billion of bottom line profits in 2026. This would be a faster than expected, larger than expected rollout of robotaxis, likely some kind of rollout of robotaxis in China, FSD definitely in the Chinese and European markets by then, with higher adoption rates than expected, which I think will happen, especially in China, where people tend to be more tech friendly. This could also mean deliveries of over 3 million, right? There's a combination of different factors that could lead to a bottom line profit of 40 billion divided by 3.3 billion shares outstanding could lead to about $12.12 of EPS in 2026. Now, by the end of 2025, again, you're going to be thinking about 2026. And if that is the expectation, that Tesla could bring in $12 of EPS, which is very much on the high end range of all analysts' targets right now for 2026. Slap that with 125 times multiple, you could be at $1,515 by the end of next year. Now, things would have to go incredibly right for Tesla, with very little speed bumps next year to get to those kind of prices. Is it impossible? Absolutely not. Is it probable? Not really. So I think a base case assumption of 850 to 945 makes the most sense for next year with the current setup that we have. Again, that's assuming we don't have a recession. That's assuming that robotaxis launch in more than 2 states, that there's a larger launch of robotaxis, that Tesla deliveries pick up next year, likely more than 30% delivery growth, maybe 35 to 37% delivery growth. Hell, maybe more than that if we avoid a recession, right? You're assuming a lot of good news with a base case of 850 to 945. The bear case is assuming a recession, right? It's assuming that people just can't afford, Tesla products. And even if Tesla launches a robotaxi network, if we are in a recession, that's not going to mean as much to Tesla stock if we're not in a recession. Like, is that going to be good? Of course. But how's the economy at that point? I think that'll take precedence, like it always does, over everything else. So I think the bear case, 200 to 250 is pretty logical. And I think that would be I think that would happen in the first half of 2025 if we are going to get that bear case, if we are going to get that recession. I don't really see that in the second half of 2025. As far as, am I buying Tesla today? Of course. You want to buy Tesla on a periodical basis, whether that's $50 a month, $50 a week, whatever your magical number is. I think that's the best way to kind of get in Tesla, is just systematically buy Tesla on a regular basis. I like Tesla at these prices. I would like it more during this correction that I see in Q1 of 2025. That's when I want to go heavier on Tesla. That's where even potentially options could look, appealing if Tesla does fall, let's say, back to the 290s or 280s, 270s during some kind of correction event in Q1 of 2025. Because I think after that correction, you're probably not going to get much downside for Tesla, obviously probably not that large of downside throughout the rest of the year, unless things just go bad for Tesla, in which, again, the bear case is 200 to 250 by the end of next year, which could definitely happen. But I think there's a much stronger bull case for Tesla in 2025. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a great rest of your day. Let me know your bear case, base case, and bull case for Tesla next year. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.